What is going on, YouTube? Another day, another opportunity, another day in front of the charts. Reading price action today, New York, as always. We're going to have a live tape reading session. Maybe I'll catch some trades. Let's see. So I would say we start off at the high time frame analysis and see where price is going to drop back down into. High time frame bias remains bullish. We're going to drop down into lower time frames in a second after this high time frame analysis. So we've taken our relatively equal highs, okay? So and we respected this up closing candle's midpoint, okay? Why is that important? Because this up closing candle acted as an order block on the downside, okay? So price was trading up into it. Opening price, there is a change in state of delivery, order block. Respected it multiple days and then went lower from here. So this candlestick and its gradient levels are important, okay? So yeah, it's better like this. Okay. So this candlestick's gradient levels are important, and as you can see, we traded back up into the midpoint, which is the mean threshold of this order block, and respected this midpoint. Okay, so we wicked higher. We've taken out on Monday, yesterday, we've taken our previous week's high, traded up into mean threshold, and then we are witnessing this huge retracement lower. Now we have to determine whether or not this is a retracement or it's, yeah, like if it's a retracement back into this order block, or if it wants to really have a deep retracement back down into this fair value gap and even take out this low. So like I said in yesterday's live stream, I want to see higher prices. So my weekly expansion bias is actually bullish. So I want to see price go higher. Why we have these relatively equal highs and all-time highs. Yeah. So I would have preferred price to just rally higher and keep the bullish strength to the upside and continue higher. As we can see, yeah, seems like today at least has a deep retracement. If we close down in here, or if we only wick higher and close above in here, that will determine whether or not we are expecting higher or lower price for the week. Okay, so what I'm looking at on the downside is these down close candles and these down close candles. Okay, this is an order block, and price now trades down into this order block. And if price wants to go higher, it should respect these two down close candles. We have a volume imbalance in here. Okay, so price can trade down to it. If price wicks into it and we see a bullish reaction off of it, that's fine. That's permissible to see a continuation higher. If we have a down close candle today and it closes below this candlestick's low, I mean, then to be honest, it's kind of difficult right now for me. My weekly expansion bias, if we can look at the weekly chart real quick, is still bullish. Yeah, I'm looking for these relatively equal highs, and yeah, we might see retracement down into this weekly fair value gap in here. So if we look at the weekly fair value gap, it looks like this. That's a weekly fair value gap. Go back to the daily. Okay, so retracing lower, order block in here. So like I said, if you want to see if price continues higher, I want to see price respect this order block. And yeah, we are already in the weekly fair value gap. So this is the discount, the D-ray should support price higher. I'm looking for that, but yeah, I can be wrong. It is not. It is difficult to say right now because tomorrow's FOMC, which can manipulate the market as well. So yeah, difficult. So I would say let's go to the 4-hour chart real quick and no, go back to daily for a second. Let's annotate this daily fair value gap in here. That's the one that I was looking for in the beginning. So that's daily fair value gap, inversion fair value gap, and we have this auto block in here. Okay, that's a wick of this auto block. So price should find discount sensitivity inside of this daily order block wick. As you can see, price traded down into in here, respected it once. So I might, I want to see price use it as well again in here to maybe send price higher. But I already don't like this huge retracement. Yeah, looking at the 1-hour chart, it looks like a market maker sell model. Why? We have relatively equal lows down in here, this low in here. So smart money reversal, low risk sell, first stage distribution, and yeah, second stage redistribution, maybe in here. So it's not fully developed yet. If it wants to go for sell side, here it is, relatively equal lows down here. And one rule I have, even though we have a bullish bias on the daily chart, if you're just looking at the 1-hour chart and price looks like this, okay, this is extremely bearish on the 1-hour chart at least, and the majority of the trend was lower, obviously. So you don't want to be the one who tries to pick the bottom in an intraday bearish market, okay? So a high time frame is bullish, but intraday, yesterday and today, is obviously bearish. So I'm rather, even though yeah, high time frame bias is bullish, I'm rather looking for a short targeting these lows or a reasonable sell side rather than looking for long, because yeah, like I said, I don't want to pick the bottom in an intraday bearish market. So we already have taken out these relatively equal lows. If you want to go lower, this low, these relatively equal lows, and we have the daily fair value gap high, which is this line in here. That's a high. So let's go 50-minute chart. Yeah, it looks the same as a 1-hour chart. 5-minute chart. Turn on the kill zone indicator, and as you can see, Asia, we had down close Asia session. So Asia opened in here, closed down in here. Now midnight opening price is right around, yeah, in this vicinity. Consolidate a little bit, traded lower, then London traded back up into the midnight opening price, and went lower from there. And we've been rallying, or yeah, dumping lower since then. So see how price wicked exactly to the midpoint of the daily wick midpoint, the order block wick. And we have beautiful, obvious, relatively, why is it orange and dotted? Wait, what? Okay, yeah, this is better. So we have relatively equal highs in here. So we might see a buy side sweep, take out everybody who's been shorting already, and then roll over and continue lower. Okay, so first percent for value gap. Is there volume bands on the low? Yes, sir, there it is. Okay, so that's the first percent for value gap. And we have this entire auto block. So if price wants to go higher, you should respect this auto block in here and then take out and go for buy side. Okay, let's see. Buy side is striking distance. We have a breaker, this up close candle, trading lower into this wick, which is part of the breaker. 1 minute auto block. Minor buy side taken, so we had buy side, buy side. So these are actually relatively equal highs as well. So if it is extremely bearish, you would not consider these as relatively equal highs. Why? Because we had relatively equal highs in here, and we've already done the damage on the buy side. With this run higher, taking out relatively equal highs, okay? So technically we have already done the damage on the buy side. So if it wants to go lower, price actually does not need to go above pre-markets high and London's high in here, okay? Even though, yeah, these are relatively equal, we've already done the damage on the buy side, so we don't need to go for buy side all the way up in here. We had relatively equal highs, so if it wants to go lower, it can already go lower from here. Yeah. Okay, let's determine further sell side targets. Let's see. Give me a second. So What do we have? Sell side. We have 1 minute relatively close. Okay, since we are on the sell side of the curve, like I said, we have a market maker sell model right now, okay? So this is the buy side of the curve, this is the way up, and this is the way down. So obviously for targets and PD arrays and stuff, you have to go and look at the buy side of the curve to determine where, where the target is for the sell side of the curve, where the PD arrays are that the sell side curve should respect, so on and so forth. For example, you have on the buy side of the curve, you have this 1 hour bullish fair value gap that should act as an inversion fair value gap on the sell side of the curve, as it was used in here. Okay, so you understand what I was looking for. So let's go back to the 1 minute chart. As you can see, we respected this 1 hour. Oops. 1 hour fair value gap. Now we close below the first fair value gap. So if it wants to go lower, it should now respect the midpoint and this all block in here. See how price failed to trade up to the midpoint? That's what you want to see. If price is bearish, you want to see price to fail to trade up into premium arrays. And in this case, it failed to trade up into the midpoint. So that's actually indicative for further bearishness. So now you want to see if we can continue bearish order flow. version fair value gap. So the problem is, or the reason why I'm not taking a short right now is I don't like trading into uncharted territory. So what do I mean by that? Yeah, we have on a 1 hour chart we have a buy side of the curve in here and targets that we can aim for, and these sell side liquidity pools and stuff. But I don't like being dependent on price action which occurred like, I don't know, days ago. So I would prefer a price to maybe created some relatively equal lows down in here, and we were still above the relatively equal lows and have taken out buy side. And then I would aim for these intraday relatively equal lows that we may have engineered during pre-market or London session or whatever, and aim for them. But trading right now is like, yeah, okay, you can short, and yeah, we have these targets right here, but it's just I'm not comfortable trading into an unknown territory, if you know what I mean. Like, it's difficult to describe, bro, but so in simple words, in simple terms, bro, my model is not presenting itself right now. I like to take trades from and to midnight, and midnight is above in here, somewhere around here, okay? And I'm not looking for long, I'm looking for shorts, and we are pretty far away from midnight opening price. So see how we've been respecting this 1% fair value gap and this auto block. So that's indicative for bearishness. So I want to see price close on a body closing basis below this low. If we can close below this low on a closing basis, then we are likely to see continuation lower into this sell side and maybe down into this sell side. Yes, sir. There you go. Okay, this is now financial advice, obviously, but like I was outlining, we closed below the first win fair value gap, so that validated as in reclaim bearish fair value gap. Okay, so it was a bearish down closing candle, so that means it's a bearish fair value gap. We traded back through again, and now close below it again. So now we should see it should act as its first utilization, and the first utilization is a bearish fair value gap. Okay, so as price is closing below it in here, this candle, you want to see price to be, you know, rejected and supported to the downside, so it should act as a resistance. And we have this auto block, so that is technically a valid trade idea. Like I said, nothing that I would comfort to take in this, you know, with the state of experience that I have right now. But I mean, that's a reasonable trade idea. Okay, we have an auto block, we have a first and value gap. We've taken our relatively equal highs. We are proving bearishness, bearish order flow, and bearish continuation. So yeah, sell side tagged, buy a tick. Now we see retracement, pretty fast, deep retracement. Breaker in here. Okay, we have a high, a low, a high, and then a low, low. So this down close candle is a breaker. If price wants to keep moving lower, it should respect. Come on, it should respect this candle right here. And as you can see, bro, this is beautiful. Look at the midpoint. See how the body's close in here? The wicks went through the midpoint. Look, the body's respected it. So now you want to see price getting heavy in here. Try to back up into first presented Favati gap once more. Look where the body's closed. Yeah, nice reaction. Beautiful. Come on. Close strong. I mean, close weak. So, give me a strong down closing candle, bro. I mean, we have FOMC tomorrow, and if you look at it yesterday's opening session was horrible. We had like high resistance liquidity run conditions for the first hour of trading from 9:30 to 10:30. So I mean, we had low resistance so far, but this doesn't look like low resistance to me right now, to be honest. I mean, this was fine. Then we had this move lower. Okay, but price now going sideways again. That doesn't bode well for a nice fluent continuation lower. Not saying it can move lower. I'm looking for lower prices right now, but this looks ugly. We've taken sell side, and we traded down into the daily auto block. So let's go back to daily. This is the down closing candle that I was referring into in the beginning. Grade the wick, which is part of the auto block in here. This down close candle, 1 minute chart. Oh yeah, there you go. Manipulation again, nice. I love it, bro. This under this administration in America, it's pretty tough to trade. Oh yeah, respected this daily auto block midpoint in here. Respected the lower quadrant. So if you grade the range, you respected the lower quadrant. Took out sell side. And yeah, like I said, this sideways movement doesn't bode well for continuation lower. Spending too much time inside that auto block. Trading up into it in here, respecting the midpoint, respecting the 1% fair value gap. That was enough to see lower prices. We had this printing lower. That was looking good. I said I was looking for a weak, a strong down close candle closing down in here, and a wick only wick lower and closed up in here. So then I said, that doesn't look too good. And now we are witnessing this deep retracement up into this fair value gap. So what is price going to do now? Respecting the 1% fair value gap midpoint. Okay, so S&P 500 looks pretty ugly to me right now. It's just moving sideways, even uglier than yesterday. Ah, August price action is insane. August price action is crazy. Yeah. Keep your hands off the charts. I mean, look at ES. That doesn't look good for continuation. Low resistance liquidity run condition for NQ as well. I mean, look at this. That's insane. Well, that is insane. So 950 to 10, 10. Yeah, all of a sudden we have low resistance liquidity run conditions. Yeah, you kidding me, bro? I mean, look at the ES. What is Dow doing? That was printing sideways as well. So I would not trust. I would not trust that. I mean, it can run lower and then without me, but it's having lots of deep retracements. And yeah. So next sell side target is down here. daily fair value gap, inversion fair value gap. Orange shaded one. Take that off. And this is the daily fair value gap high. This dotted line. And we have the upper quadrant. So next target is this sell side, which is in close proximity to the fair value gap high. Now if we grade the range from this low to the sell side, so price respecting the midpoint, that's an implied dealing range, okay? So I'm grading the range from the previous short-term low to our target. And it's been respecting the midpoint so far. I want to see a closure below the midpoint. That would bode well for continuation lower into the daily fair value gap. Fair value gap in here. Okay, we gotta gain some confidence after this ugly August price action so far. So reviewing today's New York session so far, I was right with having bearish bias. So we were looking for low prices. That was correct. Looking for manipulation first. That was correct. Relatively equal highs. Relatively equal highs. Okay. Traded lower. That's enough of a buy side rate. Close below first percent fair value gap. Looking for lower prices. Low prices being sell side in here, sell side in here, and daily fair value gap. To me, it proved that wants to go lower as price was closing below the first percent fair value gap in here. But to be honest, everywhere in here is not really a trade opportunity for me to get short in. I mean, yeah, we traded higher, took out a short-term high, trade up into fair value gap, first percent fair value gap, respected the midpoint. Okay, that's nice. Displacement into it, displacement below it again. So this is a balanced price range. We have a busy and SIBI fair value gap. Price trade up into first percent fair value gap, low again, respected it. Okay, so here I said, oh, it's difficult to see the continuation lower, expecting a nice run lower because of S&P doing whatever it's doing, Dow going sideways as well. So we're having high resistance liquidity run conditions. So that's the reason why I was not looking for a trade or to take a short. And we have a deep retracement back again. So yeah, eventually we will arrive into the daily fair value gap high in here and the sell side maybe. But yeah, I don't want to sit through this, through these deep retracements. And yeah, so bias was correct, the narrative was correct. Are we able to profit off of this run lower? No, we don't. Or I don't. I'm not saying that you would trade like me, you took my trades and whatever. I'm not a financial advisor, so everything I'm sharing with you guys is just my opinion, and I'm just sharing my thoughts, and not saying that you should take a short or long or whatever. So yeah. Fair value gap that I mentioned was this one. Is there a volume balance? Yes, there's. On low as well? I don't think so. Okay, so you have to do it like this. Look, that's what I'm saying. We are inside a 5-minute auto block, so it still can go lower if you can look at the 5-minute chart. We traded back up into first plane Favali gap, so this is an auto block. We have this wick. We're inside the wick, so we can create the wick. Go back into the 1-minute chart as well. Again, 5-minute auto block wick. So our price is already respecting the midpoint of it. That's looking good. Nice reaction. See, we trade back up into it and a quick reaction lower. So let's continue lower. Bro, I'm thirsty. Thirsty. Nice reaction. Pretty nice reaction. That's what you want to see. I want to see closure below this Favali gap's midpoint and even the low and this low. Yes, sir. Okay, we closed at the low. I want to see a closure below it. That would bode well for continuation towards sell side. Order block. See how price is retracing higher again? Because price just closed at the low. But it needs to close below it in order for price to confirm this one as a reclaimed bearish Favali gap. So far, it's using it as a discount array to move higher. I want to see it close below, trade back up to it to use it as a premium array. Because when we want to go lower, make lower lows, and lower high, the lower high forms in a premium array. Now we're making higher highs, higher lows, sorry. Low, higher low, higher low. That's why I said I want to see price trade below the below this Favali gap and even below this low and close below it. That would be nice for continuation lower. We didn't get it. So now we are back inside the 5 minute auto block week. Do you see these wicks? Bro, price was not even up in here. It just wicked higher. This is still manipulating, bro. Price is being heavily manipulated. Same thing in here. Bro, price was not even... I think, I don't know if I'm mistaken right now. But price did not really show the printing of the body up in here. It just wicked higher. It just... Boop! But you didn't see any bodies up in here. It just... Pop! Wick higher and bodies remained down in here. This is just Phil manipulating the market. Who's Phil? Just a proverbial, person. It's not a real person. It's just them, market makers, manually intervene and manipulating the market. So, 5 minute chart, back again inside the first Favani gap. Still inside this 5 minute auto block. But yeah, we are back inside the range. Oh, this is complete BS. So where did we trade down into? Daily auto block again. That's the daily auto block that I was referring to in the beginning of the session. And look at this. Or look at this. Look at the reaction. That's insane. To be honest, I think I cut the stream early today, because yeah, it's not showing interest in continuing lower, and we are back inside the range, so we are more likely to see some more of this sideways movement. Okay, I don't want to be part of it. I don't want to waste my time. I think that's enough of tape reading. Yeah, it was not as bad as yesterday's session, so we could work with that. Doing some tape reading, that's fine. But yeah, I think because the stream early today, we are back at it tomorrow. Tomorrow we have FOMC. Is it FOMC at 2 p.m. or when? 2 p.m. or 8:30? It is 2 p.m. Okay, yeah, it's FOMC meeting minutes. Okay, meeting minutes are always at 2 p.m. Yeah, Thursday, Philly Fed. Bro, We have FOMC meeting minutes on Wednesday, Fed announcement on Thursday. So yeah, I hope we can get some cleaner price action after tomorrow 8:30 and on Friday, because working with this is just horrible. But yeah, I hope you guys enjoyed it. I hope you guys stayed solvent, preserved capital, and not gamble in this market environment. And Lord willing, we see each other tomorrow, guys. Be safe.